Crude oil today has moved close to $70 levels but failing to stay above. It is now trying to trade bearish again. It has come down towards the support zone, the most critical support zone at 69.3, 69.6. While natural gas has recovered a bit and now has seen a highs at around 3.48 and now trying to erase some of the gains for the day. What to expect now from oil and gas? Can we go ahead and buy? Can we expect more rise? Or there is a possibility of a drop before the market closes early today on the account of Christmas holidays? Yes, all the markets are going to remain closed tomorrow on account of Christmas, and yes, the next day, the Boxing Day, also most of the markets are remaining closed. So what to expect now from oil and gas? Way to enter, way to exit, how to profit, everything we're gonna see with the help of charts and indicators. This is the only channel to give you two updates a day with detailed analysis and logical levels. The subscribe, press the bell icon, do like, share, and comment. Join the free Telegram channel for live updates and join the channel memberships here on YouTube to support the effort. Let's start. First, we look into oil, followed with gas. If you look at oil on the early chart, see moving average is crossing over here and prices have come down to take the support from the moving average. 69.3 levels you should watch out for, below which you can take a selling entry. Expect it to move towards 69, and if 69 is taken, more bearishness should prevail. What is happening here? Look at the formation, divide this into two, you can find a symmetry, double top, and it is trying to reverse. It can in fact move towards the bottom here. If oil is bearish, it can try to move towards 68.4, and on the way to 68.4, 69.2, 69 is going to be the first support zone. Very, very important. Stochastic looking down, the MACD has retraced, trying to converge here. It is not yet crossed over. The RSI is looking down as well. Coming to 2 hour, on the 2 hour charts, what has happened? See, preceding few candles were with increasing bullishness. This candle started flat and is starting to drop here. The moving 20 period specifically is proving out to be good support, and it is also delivering higher lows, higher highs. So it is not that oil prices cannot reverse now. Yes, these can still reverse. Yes, we can see it breaking beyond 70, possibilities there, and that is why I say as long as now 69.3, 69.3 and 69.2 zone is not taken, we have to be careful. Below 69.3 you can take a sell, expect, or rather I will say 69.2 and 69 should be the next support zone. Very, very strong support exists here. The stochastic looking down, the MACD is still in green. It is trading with little divergence and bullishness. The RSI has dropped here. Coming to 3 on the 3 hour charts also, the observation is more or less same. See, first of all, a flat top is seen here. Thus it suggests that the zone till 70 is very, very critical for oil to break past by, and it appears 69.8, 69.8, 70 should be a very strong hurdle for oil to break past by. Once it breaks beyond this, you can stay bullish for 70.4, 70.5, and then beyond this 70.8, 71. We also know that beyond 71 sky is the limit for crude oil on the, but right now it is struggling here. It is struggling to stay bullish. See this drop here, though it has shown a very good recovery, but I can see it retracing here again. So yes, you can sell here at 69.3 with a caution note till 69, below which more bearishness should be there. Stochastic looking down, the MACD is still in green. It is divergent, it is still looking upwards, and yes, it has lot much of room on the upside for it to rise. RSI comfortable. Coming to 4 hour, the observation is same on the 4 hour charts. Remember, increasing bullishness here. A flat bottom suggests 69.3. Very, very good support exists here. And the selling entry in oil is only if you see the higher price below 69.30. Else, what can happen? It can still bounce back. It can still reverse. And if you see it is staying above $70 level, certainly one has to stay bullish. There is no other option. And then it will continue with the momentum towards 70.4, 70.5. Stochastic rising, the MACD also, remember, it has crossed over at the bottom. It is looking upwards and it has lot much of room on the upside. RSI flat here. Coming to the daily, and before we proceed to daily charts, if you want to learn this art of trading, join my mentorship batch, and if you just want to trade as per the signals, be a part of my signals channel on Telegram. Connect with me, write an email, ping me over Telegram for your queries. And if you're looking forward to a broker which offers you a free account with lowest spreads and no hidden charges, easier transactions, and easier withdrawals from across the globe, you can find the recommended broker link also in the channel and video description. Now, very clear on the upside, the resistances are pretty strong here till 70. Look at these four candles, pretty much beautifully aligned. The top is very much aligned here. Thus, it is very, very important for oil to come out of this and oil to trade beyond 70. If it trades above 70, you can say that the bulls are back. We can look forward to 70.4, 70.5, and in fact 71. This time, if oil breaks beyond 71, remember, it is consolidated enough. If it gives a breakout, it is going to be a stronger one. towards 71.4, 71.5, and then 72.5 levels. Stochastic rising, the MACD is still in green and RSI flat. So considering this, I will recommend you to buy at 70 and wait for 70.4, 70.5, and then 71 to be taken. If 71 is taken any point of time today, tomorrow, stay bullish. Tomorrow, and anyways, is a holiday, but day after tomorrow, stay bullish beyond 71. We are looking forward to 71.5, 72.5, and 75 levels very, very soon. On the downside, a selling entry is at 69.3. If you see oil trading below 69.3, take a sell, expect at 69, 69.1 as the first target, 68.8 as the second, and 68.4 as the third. Below 68.4 is where the bears will be seen, and we can look forward to a greater correction towards 67.8, 67 levels, chances for which appears to be less. Take your positions, take your trades accordingly. Let's move to natural. What's happening with natural gas after hitting the highs? It has dropped here. It has taken the support from the 100 period, and it is trading in this retracement channel. I will still not trade this as bullish as long as 3.5, 3.54 zone is not taken. Only and only if, and now it is very, very important for natural gas to come out of this retracement channel, which means either it has to trade below 3.35, 3.3 zone, or to move above 3.5. As long as it stays between this zone, we have to exercise a bit of caution here. Stock IC is at the top here, while the MACD, after hitting the lows, it is crossed over. It is trying to trade with divergence and bullishness. RSI is comfortable here. Coming to 2 hour, the observation on the 2 hour charts is more or less same. See, rise retracement, rise here, it could start to retrace. Now see, on the downside where you could take a sell, the preceding candle lows need to be breached here. This is definitely a critical support here. Look at this, it has found its support here, and it is again getting this support at the same zone. So now if you see it is staying below 3.4, you can take a selling entry, but then 3.37, 3.35 is the support zone it needs to breach in order to turn bearish here. As long as it stays above 3.35, we have to be careful, and then 3.3. If 3.3 is taken anyways, it's going to be a bearish turn where 3.25, 3.2 should be seen. Stochastic is seen rising. MACD has retraced, it has tried to converge, it is not yet crossed over. RSI is flat. Coming to 3 hour, on the 3 hour chart, similar observation, rise retracement, rise here, higher lows and higher highs here. We have to wait for a breakout and see it can deliver a second bullish candle, because see, a rise retracement, first bullish candle, and the second one can be there here. So now look at the top here, this is the zone it needs to break, that is 3.5 to 54. So if that is taken, then sky is the limit on the upside. 3.6, 3.64, and then 3.8 levels should be there very, very soon. 20 period moving average here giving it a very, very good support. That is what you should keep a note of. Now as long as this stays above 3.4, and that is specifically above the 20 period moving average, we should be careful here with the sells. And then specifically till 3.35, we should not be treating natural gas as bearish here. Stochastic has retraced here. The MACD has crossed over at the top. It is trading with slight divergence, slight bearishness looking downwards. Notice what MACD is doing. Rise retracement, rise retracement. It can retrace towards the bottom here. Yes, it can retrace towards the bottom, which means the lows could be far below towards 3.35, or in fact 3.3 levels. So right now the buying entries are far above towards 3.5. Until 3.5 is not taken, we should be careful with the buys. That is also clear. And now if you look at the stock IC, this is looking down here. RSI is looking down as well. Coming to the 4 hour charts, on the 4 hour chart, similar observation here. Wait for it to trade below 20 period moving average, and this is what makes 3.37, 3.5 as a very critical support zone. Any drop below 3.37, 3.35 zone is a critical sign, and then you can expect more bearishness. Else what is happening on the 4 hour chart? See, this is how it has been trading. It has formed a very good support here at this zone towards 3.48, 3.5, and thus 3.38, 3.4, and thus you have to be careful here. And then 3.3735 anyways is a good support. Below that 3.3 is a certainty, and below 3.3 is where the bears are waiting. Also notice it is trading in this retracement channel. It has to come out of this retracement channel, then you can expect similar size of the drop, where in fact the prices can move towards 3.2. The stochastic retracing here, the MACD has crossed over. It is trading with divergence, it is trading bearish, looking downwards. And yes, this is how it has been trading. We have to wait for it to confirm. Even if crossover on the upside will be a confirmation of reversal, but right now the stance is pretty bearish. RSI has dropped as well. It has come out of the overbought zone. Coming to daily. Now look at the daily chart. See a preceding candle after a reversal sign, first bearish candle, and the body size is also greater than the 50% of the complete move. So now current candle, it has already formed a wick. It can form a tail. It can try to deliver a second one, and if it continues to drop from here, in fact 3.2 can also be achievable here. Yes, can get achieved here. You can see this is how it has been trading. Every drop is followed with a every rise is followed with a retracement, and this time bigger the rise, so it could deliver a bigger retracement as well. If you notice, the stochastic is overbought here. The MACD is in green, trying to trade with little divergence and bullishness. The RSI is flat. Considering this, I will recommend you to only buy if you see natural gas staying above 3.48, where you can expect 3.52 at the first resistance, 3.5455 at the second. If these two are taken, then there is no option for you. There is no alternative. Stay bullish for 3.6, 3.65, and then 3.8 levels very, very soon. But right now, the stance is not very much supportive of such a stronger rise. And that is why if you see now net gas trading below 3.4, you can take a selling entry, but then 3.38, 3.37 should be the first target zone. Very, very critical support exists in between 3.3837. If this is taken, then 3.3534, and if 3.3534 is taken, then 3.3 level should appear. Beyond this, if net gas drops today, stay short for 3.25, 3.2 levels very, very soon in the next couple of sessions. Take your trades accordingly. Like, share, subscribe, and comment. Join my mentorship batch. Join my signals channel. Do not miss to watch the twice a day updates. And I wish you and your family a very, very happy and Merry Christmas and a Happy New Year in advance. Thank you. Have a great profitable trading day.